I had mentioned in the past that I thought gold was in a downtrend, and today the type of sell-off that we experienced was much like the previous declines, from here to here, and now we're getting something very similar. And just to tell you that when prices are in uptrends, you don't see this kind of sell-off. You do occasionally, and the market holds up, and then prices will kind of consolidate sideways before they go higher. But I just wanted to point out that a lot of people think that gold is ready to go to new highs, and I don't think that's the case. I think with today's sell-off, I think a lot pretty much is on the table that maybe everybody's going to change their mind. When you break in one day, look at all of this. That was a pure consolidation move for a week, longer than that, and we just went right through it in one day. I can show you the volume as well and how weak that was, but again, this price pattern is a rising wedge, and most of the time when prices break out of those rising wedges at the apex, you see these kind of moves. You see these ugly, nasty declines. Now with today's move, we were able to complete the bearish divergence on the MACD, the stochastic. I think yesterday, actually, the stochastic crossed over, or maybe it was the day before, but it almost gave you a heads up. So I thought that was interesting. Okay, there's several things that I want to point out with silver, so pay attention. This is very important. Dating back to the May highs, this trend line held up fairly well for each point of resistance. You have this point, and we broke here. Now with today's session, this bearish engulfing candlestick managed to engulf the prior 4 sessions of trading. That is, if you include just the closing price. It managed to stay within this rising wedge pattern. I drew this to a rising wedge pattern. It seems to be a rising wedge pattern rather than a channel. But look at where today's close was. It kind of is sitting on this long-term trend line as well as the lower accelerated trend line of the rising wedge. This often is basically we have a reversal today, and I want to show you that in a downtrend, prices usually correct back up to the 50% level and higher, and we got that. We're holding up right at the 61.8% Fibonacci retracement. So you throw that in with the possibility of maybe we're in a channel, and I'll show you. Notice how prices reacted right off of this trend line, which is a duplicate of the lower trend line I just drew. Could be that we're in a channel and the downside risk is likely to touch this lower channel line drawn down. And just to clean it up for you, this is what I'm looking at. This is the declining channel that I've drawn, and so far we have this trend line that it's possible prices may go down to test, but so far it's a pretty accurate drawing of how price has been contained, so keep that in mind. And we're seeing more weakness in the Russell again. We had prices break below the 10 and the 20 day moving average. The MACD still remains across. The histogram bar has pushed even lower. The RSI has broken below 50. Prices are likely to go down and test the 50-day moving average, so we'll have to see how prices react at that point. We did manage to break the horizontal support. And up close, you can see on the 4-hour chart for the Russell, prices broke. You can see that horizontal support held several times. 1, 2, this is where prices were able to gap at. And now we have closing below this horizontal support. All of this was a triangle, really, and it was a distribution pattern. We were betting before whether prices would break to the upside or to the downside. We got it. We should expect more follow-through with this, so keep that in mind. And we had a pretty nice move in the dollar today. On the daily chart, you can see that prices were able to go back up, and find resistance at the 20 and the 10-day moving average. The 10 has crossed the 20, so keep that in mind, but it does appear like we're trying to set up a divergence, and that you can see on the MACD, you can see again on the RSI. Now, it was here that I had mentioned that I thought this was a bear flag, and that was 2 days ago. I thought that, it seemed more likely that prices would go lower to better define this divergence, and we got it. And you can see with this MACD bullish divergence, it managed to allow for prices to get to even more oversold levels to then violently push out of, well, where it did, and it managed to break the trend line. So obviously the dollar now has a reversal signal, break of the trend line. The MACD has pushed back above the center line. This is bullish. Now eventually we'll either consolidate or we'll pull back, but as of right now things are turning up. Now today's move in the dollar managed to produce a bullish cross on the stochastic. We still need to break back above this trend line in the daily time frame, as well as regain the 10-day moving average, and that would imply even more bullishness, and you would see then a reversal transpire for the daily time frame. So the hourly charts that we looked at are showing a reversal, but it needs to be strong enough to spill over into the daily time frame. This is a topping tail candlestick, and in order to validate the candlestick, we need to see a confirming close below the intraday low of today's session. That comes in at 1363.81. We also need to see lower highs and lower lows on the hourly time frame, and we're not getting that. Again, we need to see a push below the 10-day moving average, and really a decisive push below this prior range in order to give confidence to the pattern. It's something I'll be watching for. I think with the breakdown in the Russell and in the metals today, it's likely that more weakness is coming and it's going to spill into the other equities indexes. So let's see what happens for the rest of the week, and I'll lead you from there.